Welcome in. If you are listening to this right now, I already know a few things about you.
Oh, yeah.
Yeah, you are a learner. You're endlessly curious. And because of that, you have undoubtedly been absolutely bombarded with the same relentless cycle of headlines about the artificial intelligence revolution.
Right. It is everywhere. You can't escape it.
Every single day, it's a news story about centralized data centers,
Yeah.
massive computing power, and, specifically the silicon brains running the entire show.
The processors.
Exactly. The discourse is completely saturated with talk about specialized chips and GPUs. Everyone is staring at the heavyweights. We're talking Nvidia, Advanced Micro Devices, Broadcom.
The usual suspects.
You know the names and you know the narratives. But for today's deep dive, we are going to completely flip the script on you.
We really are.
We're looking at a stack of incredibly revealing financial research and market data.
Yeah.
And the goal today is to break an expectation you probably have right now about where the real momentum is hiding.
Because the unsung hero of the AI boom, the piece of the puzzle that is quietly generating some of the most staggering returns in the entire market, isn't a chip at all.
Yep.
It is cables.
It's cables. It sounds almost too mundane when you frame it like that, but that is the mission of our deep dive today.
Right. We are exploring how the physical infrastructure that actually connects all of these AI components, specifically fiber optics, is quietly becoming just as critical as the processors themselves.
And depending on how you look at the recent numbers, this infrastructure play is arguably more lucrative for investors right now than the silicon itself.
The focal point of our analysis today is Corning, a company trading on the New York Stock Exchange under the ticker GLW.
A company most people associate with, like Pyrex dishes or smartphone glass.
Exactly. But while the entire financial world has been hyper-fixated on the big chip makers and debating the ceiling of their valuations, Corning stock has rocketed 170% over the last 12 months.
Which is wild.
They are crushing the market gains of the very tech giants they supply.
Okay, let's unpack this. Because to truly understand why a legacy glass and ceramics company is suddenly the hottest property in the AI gold rush, we have to visualize what is actually happening on the ground.
We really need to look at the physical reality of a modern AI data center.
Right, because when people talk about the cloud or AI, there is this tendency to imagine an abstract, wireless, floating intelligence.
Oh, absolutely. Like it's just magic in the air.
But the reality is incredibly heavy, it is blisteringly hot, and it is overwhelmingly dense. Let's look at Nvidia's flagship Blackwell GPUs.
The gold standard right now.
When a data center operator sets these up, they deploy them in NVLink racks. Picture a single server rack. Inside that one rack, you typically have 72 GPUs alongside 36 CPUs, plus the various networking components required to manage the traffic.
And the density of that configuration is where the primary engineering bottleneck occurs. To make those 72 processing units talk to each other so they can function as a single unified computing cluster, they have to be physically wired together. The internal bandwidth requirements are just astronomical.
And here is the detail from the research that absolutely stood out to me. To connect the components inside just one of these single racks requires 2 miles of copper cable.
2 miles.
2 miles. Just wrap your head around the physical constraints of that for a second. We are talking about taking 2 miles of copper wiring, which is incredibly thick and notoriously heavy, and routing all of it through a single server stack that occupies roughly the footprint of a large commercial refrigerator.
It borders on the absurd when you think about the cable management alone.
Let alone the physical weight bearing down on the data center floor.
Well, the weight is a massive issue, but the thermal dynamics are the real logistical nightmare here. Copper is just no longer cutting it for these architectures.
It's a dead end.
AI data center operators are rapidly transitioning away from copper and shifting toward fiber optics, and that transition is the massive opportunity Corning has stepped into.
And to understand why this shift is mandatory rather than just, a nice upgrade, you have to look at the physics of the data transmission.
Right. Fiber optic cables use pulses of light to transmit information, whereas copper relies on electrical currents.
Which means heat.
Exactly. Fiber transmits data at significantly faster speeds and carries that data over much longer distances with virtually zero data loss.
Right, whereas with copper, the signal degrades rapidly over distance, forcing the use of repeaters, and more importantly, the electrical resistance generates heat.
And heat is the ultimate enemy of any data center. But in a rack with 72 Blackwell GPUs, introducing additional thermal load from 2 miles of copper wiring is an engineering non-starter.
It's lighter, it's faster, it doesn't suffer from signal attenuation, and it runs cool. The technical superiority is obvious, but the sources we are looking at point out that this is deeply tied to the underlying economics of the AI development cycle.
It's not just about keeping the racks cool.
No, it's about keeping the GPUs fed.
What's fascinating here is how directly that transmission speed translates into massive cost savings. Consider how AI developers operate in the current market.
They don't own the hardware.
Exactly. They rarely own the hardware outright. They rent cloud computing capacity from the massive data centers, and they are paying for that computing power by the minute.
Which is not cheap.
Not at all. Training a large language model requires crunching unfathomable data sets. If your transmission cables are slow, or if there is latency in the network fabric, your incredibly expensive GPUs are sitting there idle for fractions of a second, just waiting for the next packet of data to arrive.
And when you are paying exorbitant rates by the minute for thousands of GPUs simultaneously, those fractions of a second aggregate into millions of dollars in wasted compute time.
For an AI developer, faster processing speeds facilitated by fiber optics result in substantial cost savings. Minimizing latency is the entire game.
I think for you, the listener, this is the real aha moment of the deep dive.
Yeah, the real paradigm shift.
The bottleneck in AI development isn't simply about how fast the brain can think, meaning the silicon chip. It is about how fast the nervous system can carry the signals across the cluster.
That's a great way to put it.
You can deploy the smartest, fastest processing cores in the world, but if your nervous system is made of sluggish, heat-generating copper, your cluster's reflexes are still going to be slow. Fiber optics act as the upgraded nervous system the AI industry desperately requires to justify the cost of the silicon.
And the industry data shows that the 72 GPU rack is merely the current standard. We are at the baseline of this architecture.
Just the beginning.
The roadmaps indicate that in the near future, every single rack is going to house hundreds of GPUs. The computing demands are scaling exponentially, which means the efficient, heatless transmission of data inside these facilities transitions from being a high priority to an absolute existential requirement.
You literally cannot build the next generation of AI without solving this physical cabling problem first.
The density simply will not allow for copper.
Here's where it gets really interesting, because the major players in Silicon Valley have already modeled this out, and they are making incredibly aggressive moves to secure their infrastructure.
They see the writing on the wall.
According to the data we have, in January 2026, Meta Platforms looked at this exact bottleneck and realized they could not risk a supply shortage.
So what did they do?
They signed a sweeping, multi-year agreement with Corning to secure their future supply of fiber. And the price tag in this deal was $6 billion.
$6 billion.
Meta committed to purchasing $6 billion worth of optical cables to ensure their data centers don't get stalled in the build phase.
Synthesizing a move like that tells you a lot about where the hyperscalers view the critical vulnerabilities in their supply chains.
They are locking it down.
Meta is essentially hoarding fiber. They are locking up the manufacturing capacity of a key supplier. You can design the most advanced AI algorithms, and you can secure allocations for the newest GPUs, but if you cannot physically connect the racks because there is a shortage of high-speed glass, the entire project halts.
That $6 billion commitment signals to the broader market that fiber optic capacity is going to be one of the most fiercely contested physical resources in the tech sector.
They are securing the raw materials of the digital age.
Which brings us to the financial realities, and this is where we need to follow the money, because the story shifts from physical engineering to absolute market dominance.
The numbers are staggering.
Let's look at the numbers as of today, March 11th, 2026. As we mentioned at the top, Corning's stock is up 170% over the last 12 months. Let's benchmark that against the heavyweights of the AI boom over that exact same trailing 12-month period.
Okay, let's hear it.
Nvidia is up 61%. AMD is up 94%. Broadcom is up 84%.
Those are phenomenal market-beating years for those chip makers.
Corning is quietly lapping all of them. As of our data today, Corning's current stock price sits at $136.22. That gives them a market capitalization of $117 billion.
To unpack why the stock is surging with that kind of velocity, we need to look at Corning's financial dominance in 2025. The earnings breakdown reveals a company that has perfectly positioned itself at the absolute choke point of a booming industry.
The choke point, exactly.
In 2025, Corning produced $16.4 billion in core revenue. That represents a 13% increase from the previous year.
Solid growth for a legacy materials company.
But when you isolate their optical communications business, the numbers explode. That segment alone contributed $6.2 billion in revenue, growing at a much faster pace of 35% year over year.
And the granularity of the data is even more revealing. When you look inside that optical segment, at the enterprise side of the business, which is exactly where these data center and networking deals live, that specific division delivered $3 billion in revenue.
A massive chunk.
That is up a staggering 61%. And the revenue strictly from hyperscaler customers more than doubled. The massive cloud providers are buying fiber hand over fist, and it is entirely transforming Corning's balance sheet.
The most crucial insight here, the reason Wall Street is reacting the way it is what that level of ravenous demand does for a business's margins.
Pricing power.
It grants Corning massive pricing power. When you have the hyperscalers and companies like Meta lining up to lock in multi-billion-dollar contracts to future-proof their operations, the supplier controls the market dynamics. That pricing power resulted in a record $1 billion in profit for the optical communications business alone in 2025.
$1 billion in profit.
That is a 71% jump in profit from the prior year. All of this immense profitability trickled down to drive the company's core, adjusted earnings to $2.52 per share overall.
They aren't just selling more cable, they are selling it at a significantly higher premium.
Exactly.
So what does this all mean? If you are looking at these numbers, you are probably asking the same question every investor asks when they see a chart that goes parabolic. Is it too late?
Always a big question.
Is the stock fundamentally too expensive now at $136 a share? Let's look at the valuation debate, because the data presents a fascinating tension. Based on those 2025 earnings we just discussed, Corning stock is currently trading at a P/E ratio of 48.9.
A P/E ratio of 48.9 is a hefty premium when compared to the broader market, even within the tech sector. The NASDAQ 100 index currently sits at a P/E ratio of 31.8.
Right.
On the surface, Corning looks quite expensive compared to a basket of high-quality tech powerhouses. It is even trading at a higher multiple than Nvidia right now, which is sitting at a P/E of 37.3.
You are paying a premium for a glass and ceramics company that exceeds the premium of the undisputed leader in AI processors.
But you can't just compare it to the index or to Nvidia in a vacuum, though.
Exactly. When you look at the other major players in the AI hardware space, Corning's valuation is right in line with the peer group. AMD currently stands at a P/E of 46.1, and Broadcom is sitting at 45.5.
The market is pricing Corning exactly like it prices the most critical silicon components of the AI revolution.
They are no longer being valued as an industrial supplier. They are being valued as a core AI infrastructure play.
If we connect this to the bigger picture, you have to look at Wall Street's forward-looking models. The current P/E ratio is a snapshot based on past earnings, but the consensus estimates from analysts suggest that Corning's earnings are set to accelerate.
Right, the forward models are very bullish.
They project earnings to grow from that $2.52 per share up to $3.11 per share in 2026. Following that trajectory, the estimates jump again to $3.87 per share in 2027.
That's a huge jump.
When you apply those future earnings estimates to the current stock price, the forward P/E ratios drop down to a much more attractive 39.6 for next year and 31.8 the year after that. The growth rate is compressing the multiple quite rapidly.
And the research points to a massive hidden upside that might mean those future estimates are actually far too conservative. Corning CEO, Wendell Weeks, recently stated that the total addressable market for data center optical fiber could triple in size over the long term, driven almost entirely by the networking demands of AI clusters.
Triple the market size.
Triple it. Perhaps even more immediately actionable for the stock, Weeks revealed that Corning is currently in the process of finalizing several other agreements of a similar size and scope to that massive $6 billion deal with Meta.
Oh, wow.
If they announce 2 or 3 more deals of that magnitude with other hyperscalers in the coming months, analysts are going to have to frantically revise all of their earnings estimates upward.
Despite the 170% run-up in the stock price, Corning might actually be cheaper right now than it appears at face value, provided they can execute on these pending mega deals and the margins hold.
Right.
It perfectly illustrates how analyzing the physical constraints of a technology, understanding the actual bottlenecks on the data center floor, can give you a completely different perspective on market valuations. You see the value in the infrastructure before the broader market fully prices it in.
It really does. Let's synthesize this journey we've been on today. We started out looking at the overwhelming noise of the AI boom, where every headline is screaming about silicon chips, teraflops, and software advancements.
The flashy stuff.
But by digging into the source material and looking at the physical architecture, we discovered that the real gold rush is happening in the infrastructure. It is the classic pick and shovel play, adapted for the digital age.
During the historical gold rushes, the most reliable fortunes weren't always made by the prospectors digging for gold.
They were made by the merchants selling the picks, the shovels, and the tents.
Exactly.
Today, those picks and shovels are made of high-grade glass and fiber optics. Being truly informed on this topic means looking past the obvious headlines and understanding the tangible reality of how this technology is constructed. The AI revolution isn't just code. It is thousands of miles of glass, pulsing with light.
This raises an important question, one that goes far beyond stock prices, earnings ratios, and multi-billion-dollar contracts.
What's that?
If a single server rack today requires 2 miles of cabling, and we know that these architectures are rapidly evolving to hold hundreds of GPUs requiring exponentially more fiber,
Which we know they are.
what is the ultimate physical limit of these AI data centers? Will the sheer geographical space required, the immense power draw, and the incredible physical weight of millions of miles of glass fiber eventually force humanity to completely redesign where and how we physically build the internet? We are treating digital expansion as if it is infinite, but it relies on highly constrained physical materials.
That is exactly the kind of question that forces a paradigm shift. It forces you to think about the hard physical constraints we are putting on our increasingly digital world. As you go about your day, let that thought rattle around in your mind. Next time you use an AI tool, imagine the sheer weight and the miles of glass sitting in a data center making that query possible. We hope you enjoyed this deep dive into the hidden infrastructure of AI and that you walk away with a totally new lens through which to view the market headlines. Thanks for learning with us, and keep exploring.